Today I'm going to give you 3 highlights about the Canadian economy. Then we'll be going over my Wealthsimple portfolio as this is week 23. I'll be talking about all the stocks that I bought this week, so you won't want to miss that. And if you haven't yet signed up for Wealthsimple, right now they're offering $50 if you sign up today, and a bonus $25 if you sign up for Wealthsimple Cash on top of that. Alright, without wasting any more time, let's jump right to some important news about the Canadian economy this past week. First up, we've got elections coming up, so we'll be looking at the Conservatives and Liberals and what their platforms are bringing to us Canadians. We're going to be focusing on the financial spending and what this means for us as investors. Starting with the Conservatives, they're increasing the $60,000 Canada Emergency Business Account to a maximum of $200,000 based on pre-pandemic revenue. They're also paying 25% of new hire salaries for 6 months and up to a maximum of 50% for people who have been out of work for a longer time. They're also providing tax credits for dining out and vacationing inside Canada. Another thing that they propose is a GST holiday, and this is to help ailing retailers who felt the brunt effects of the pandemic. So sometime this fall, we could have a full month without retail tax, and this should hopefully boost consumer spending. They're also looking to ban foreign buyers from buying homes for 2 years. So overall, it looks like the Conservatives are planning to spend a lot of money to help the Canadian economy to recover. And what this means for us investors is inflation, unfortunately, because you can't just create dollars out of nothing. Or if they don't create dollars out of nothing, that just means higher tax. And this is going to mean people are possibly going to flee away from Canada, those who are rich, and try to live somewhere else like in the States where they have lower tax rates. Now, if we jump over to the Liberals, we can also see that they're extending the Canada Recovery Hiring Plan, which covers wages for employees in the businesses that lost revenue during the pandemic until March 2022. They're covering up to 75% of wages in rent for businesses in tourism until the end of winter. They're matching ticket sales for arts and cultural venues to make up for reduced capacity in venues, and a $50 million fund to support independent artists. Doing a bit more searching online, other things that the Liberals pledged was a $9 billion for long-term care, which would push for a $25 minimum wage for personal support workers. Other than that, there were no big spending plans that I could find so far from the Liberals. So it looks like right now the Conservatives are going to be spending a butt ton of money, but that, I think, will also help win voters. So if we do see us go down that road, be sure that inflation, I think, will be coming. If you guys were wondering where I was getting this information on the Canadian election, it's in the weekly emails from The Peak. And they're today's sponsor. I've been enjoying The Peak for the past 3 weeks. They're a Canadian-focused business email that makes you smarter in 5 minutes. If you scroll through one of these emails, it's very easy to read the headlines and get a snapshot of what's going on, and you can finish this in 5 minutes. The Peak is completely free to sign up, and they're essentially the morning brew of Canada. If you guys want a Canadian-focused newsletter that takes 5 minutes to read, and as well as it's fun and engaging, then be sure to sign up for The Peak today using the link down below. In previous videos, I've alluded that I'm looking to make a real estate investment. And in the Canadian market right now, housing sales have actually dropped. However, housing prices have still continued to go up. So this just means there are less sellers on the market and the demand is still fairly high. That's why prices still continue to go up even though the number of sales is going down right now. One thing that drives prices right now is really the price of building a new house. So the materials to buy a new house are dependent on wood prices, cement prices, and other hardware prices that are used to make a house. If those prices come down, then I believe that resale houses should be going down as well. But the effect of prices coming down does take a little bit of time because the houses that are being built right now, those builders probably bought material for sky-high prices when lumber prices were high. And right now, cement prices are going up as well. So until all these raw material costs come down, we probably won't see a reduction in prices for home sales or condo sales. So personally, I'm choosing right now to shelve the idea of real estate. I'll probably pick this up a year or 2 from now and see where the market is. However, I'll be putting more of my money into stocks. News item number 3 is that meat prices are increasing. Your 3 main meats are beef, chicken, and pork. And it's very rare that all 3 are up. And right now, we're in one of those anomaly times where all 3 are up. The reason beef prices are up is because of high temperature as well as lack of rain. This means a lack of food, and the farmers are currently debating whether they sell off their livestock early or do they wait till later on to sell off in the years afterwards. But the fact that cattle have been dying off means that in the next coming years, our supply of cattle is going to be a lot lower. And this is going to mean beef prices are going to continue to go up. And with pork and chicken going up as well, where do consumers turn for meat? So what could happen is people realize that meat's too expensive and they become vegetarians. Or the alternative is plant-based meats. Consider looking into the plant-based meat sector as people look for meat alternatives if meat's too expensive. Yes, currently plant-based meats are also expensive. However, if we see those prices come down, it could be very enticing for people to switch from meat to plant-based meats. And if you've been following my channel for a while, you know I'm very bullish on the Very Good Food Company, and I still continue to hold all my shares. I don't have them on my Wealthsimple account, so that's why you guys have never seen that. However, they're on my Questrade account. And if you guys want to have access to that, you can check out my Patreon link down below. Now let's hop over and talk about my Wealthsimple account and what I purchased this week in that portfolio. As I mentioned before, this is week 23. So all the transactions that I made this week, I'll be showing you right in real time on the spreadsheet. So first off, on the 16th, I made a deposit into my account. Then on the 19th of August, I decided to make a purchase of REI. I bought 2 shares for a price of $21.68. That very same day, I also purchased some Air Canada. I purchased 1 share at a price of $23.57. Following that, I also bought a share of Power Corp Canada. I bought 1 share at $42.06. I also put in an order for Dollarama at $59.12. And to end off the week, I made a share purchase on the Friday of Shopify. I bought a fractional share, 0.013 of a share, at $1,863.02. So with that, we've recorded all of our purchases at the bottom of the spreadsheet. Super easy to track. If you're interested in this, you can check out my Patreon group as this is currently only available for Patreon members. Looking at the metrics of this portfolio, wow, I didn't even realize that my portfolio is finally up versus the TSX index. I'm up by 0.42%. If you guys have not been here with me on this journey for the past 23 weeks, you'll know that my portfolio was down the entire time. At some points, I was down like 5 or 6% versus the index and like 7 or 8% overall. So far, my portfolio since the beginning of this journey, I'm up 5.88%. However, again, this is not a short-term portfolio, so I may be up in the short term. Next week, I very well could be down. But I'm buying all these companies that I have in this portfolio for the long term, and most of them I don't plan to sell out. Occasionally, I might have my thesis wrong and I might change up my positions. However, for the most part, I've only made maybe 1 sell in this portfolio, which was Stella Jones. The next stock that I will be selling in this portfolio, though, is the Bitcoin ETF, but not yet. I'm still waiting for the Bitcoin ETF to peak sometime later on this fall. Now I've sorted my portfolio by position size, and currently Power Corp Canada still holds position number 1. Next is the Bitcoin ETF, which is actually coming back like crazy. I'm up 20% now on this position. Then we have Kinaxis, who's also been going up like crazy in the past couple of weeks. It's at $188 per share. Just a couple of weeks ago, it was probably sitting around $150, $140 or so. I'm up 29% on that position. Then in number 4, we've got Air Canada, which I'm down 7.71%. And that's because of the Delta variant, which is making headlines right now and causing a lot of fear in the travel sector. And rightly so, because the Delta variant could potentially cause another lockdown, as news articles are saying. Another lockdown? I don't know. Maybe here in Ontario, that's very possible, but I don't think the States is willing to shut down again. Other notable mentions here are TELUS Corporation, which I'm up 10% on, as well as the Horizons NASDAQ ETF, HXQ. I talked about this ETF as my favorite ETF, and if I could only own 1 ETF, it would be the HXQ. There are also other NASDAQ ETFs, but I just personally go with HXQ. I'm not trying to like penny pinch in terms of figuring out which one has the lowest management fees. And right now, for my position of $300 to $500 per company right now, it's not really worth my time. And lastly, talking about the worst performing positions in this portfolio are DCM, Data Communications Management Corp, as well as Good Nature Products. Good Nature Products, I think this is going to take at least 3 or 5 years to recover because penny stocks are out of favor right now. And this stock, frankly, is a penny stock. However, they are growing their revenues rapidly through acquisition, that is, but eventually they will turn a profit, I believe. Also, DCM, they release their earnings, and that's what causes stock price to tank. Looking at the charts, we can see the volume, the daily average volume sits somewhere around 63,000. Now, this company as a whole is worth $47.9 million. So not even 1% of all the shares outstanding is being traded each day. So if you're investing in DCM, be prepared for all the volatility. But for me, the long-term story about DCM is them paying back their debt, as well as being a cash flow positive operation. And the amount of cash flow that they brought in 2020 is essentially their market cap. They brought in $46.79 million. And right now they're only worth $47.91. So to me, this is a bit of a no-brainer business to invest in. However, as I said before, this stock is very volatile and it has very low trading volumes. So the stock price, I don't believe, is reflecting the actual underlying business. If you've only been investing for a short while and you saw your portfolio tank quite a bit this past week with a minor correction that we had, check out this video right here and that will explain to you all the reasons that a market crash could be coming.